Hello, property navigators. Today I'm going to share some insights on buying duplexes as a property investment strategy. Now, you've probably seen the ads touting the benefits of duplexes, specifically new build duplexes, spruiking great cash flow and instant equity of $100,000 or $200,000 and the likes. Now, we don't offer new built duplex packages or any new build options for that matter. So I'll present a non-biased discussion on this topic for you today. Let's get going. What is a duplex? Without going too deep, I'm not talking about granny flats or dual living arrangements, or more specifically, I want to highlight they are not dual key properties. We have a whole video that explains all the different dual income property strategies, and the link is in the description if you want more information on that. Specifically, a duplex house is a single property on one block of land divided into two separate residences. The two individual homes are generally under one roof or two dwellings side by side with different occupants living in each side. When they're built, they are generally on the one title, but you can, depending on the local government area, subdivide if you meet all the council's requirements to then have two separate properties. So each residence has its own front door, kitchen, amenities, and any other features you would expect from a single freestanding home. The pros and potential benefits of investing in a duplex. Firstly, we have cash flow. Duplexes can offer higher cash flow and the rental yields can be higher than a single detached house. Doubling your rental income is arguably the most significant reason why property investors gravitate towards duplexes. Since a duplex is essentially a 2-for-1 property, you also diversify your risk by having two incomes coming in on two separate leases. And there is cost efficiency as they generally have a lower cost compared to building two separate detached dwellings. And number two is instant equity. Now, if you do your homework and buy right, there's potential to make $50,000 to $100,000, maybe a little bit more in equity. This is not market-led growth. It is generally done by subdividing the duplex so that you bought on one title and separating it off into two, so then you own two separate properties. This can be a boost to your investment portfolio and is certainly what gets people thinking about this option. You can then sell one, keep both, live in one, rent the other, so there's a bit of flexibility in terms of your exit options. Number three, in saying that you don't have to subdivide at all. A pro in this regard is that unlike subdivided land, a duplex on one title doesn't attract two lots of holding fees, insurance premiums, council rates, etc., because both residents can be on one title. And four, depreciation and deductions. Although I'm not giving you financial advice here, a possible advantage of having two properties is that you may receive the benefit of higher tax depreciation on your investment, especially if you rent out both sides, but speak to your quantity surveyor about that. Cons and potential downsides of duplexes. In new builds, the instant equity I spoke about often takes 1 to 3 years to realise, from the time of land registration to the tenant moving in. So it's not that instant. We don't recommend buying new property, so really do your homework here because a massive amount of the purchase price is paid in developers and builders' profits. You can buy established duplexes that haven't been subdivided. They are sometimes a bit more rare to find, but usually have a lot more scarcity value because there isn't tons of newly built duplexes popping up all over the same area. Subdividing also costs a fair bit and varies from council to council, so check that out in detail. Number two, land to asset ratio. As we know, a dwelling or the building depreciates while the land component appreciates in value. With duplexes, you're probably spending more on the dwelling because you have two kitchens, more bathrooms and lounge rooms, etc. And usually you'll spend less on the land component of the deal if it's on a smaller block, which is fairly typical. In contrast, an established property in the same area might have a higher land content, which is crucial for long-term capital growth. So be mindful of this, as you might be sacrificing capital growth in the long run for a bit of extra cash flow in the shorter term, and that could cost you tens of thousands, if not hundreds of thousands of dollars. There is also the impact of not being able to roll that equity over to fund future deposits, so think long term. 3, higher entry costs. Duplexes are generally more expensive to buy, so consider this and the limitations it could have on growing your portfolio. 4, strata or body corporate title issues. If you convert a duplex onto two separate titles, you might see some equity uplift, but you'll also have to pay body corporate fees, which reduce your net yield. You'll also have two lots of land rates and utilities, so it's essential to factor in these additional costs into your calculations. 5 resale challenges. Duplexes can be harder to sell. Most buyers are investors, not owner-occupiers, which can reduce your potential market. Even in a strong market, selling a duplex can be more challenging than selling a home. Now, if you find a duplex that aligns with your investment strategy, then sweet. Here are some extra tips. Research the area. Look into the area that the duplex is located. Check for potential growth, amenities, and future developments that might affect property values. There are plenty of areas that are saturated with duplexes, which again are owned by investors that are rented out. Many of these are not in the most desirable pockets for owner-occupiers to want to buy them, and they are the driving force behind capital growth. Understand the market. Make sure you're aware of the current market conditions. Are duplexes in high demand? What's the scarcity value of them? What are the rental yields like? Are there tons in the area, or will a lot of new built duplex packages come on and flood the market? Inspect the property. Always inspect the property thoroughly. Remember, you have 2 separate dwellings, so possibly higher maintenance costs because there are more bathrooms, 2 kitchens, and other aspects of each home. Carefully check for any issues that might require repairs or renovations, and always get your building and pest report done. Consider the long term. Think about your long-term goals. Will this duplex help you achieve them? Is it a property you plan to hold for many years? Are you sacrificing capital growth for cash flow? Ask yourself these questions. Be sure to analyze your comparable cash flow alternatives. You might be able to buy 2 single detached properties just at different entry times that may potentially get you better rental returns and capital growth over time. So remember, your investment strategy is important. Let's share a real-life example of a recent duplex purchase we made for a client of ours. The duplex was established, it was not new. It was on a big block in a well-developed and established neighborhood with solid property values and historical demand. This duplex had scarcity value as there was no other new development in the area. Now, this kind of duplex made a good investment due to its location and potential for capital growth due to the large land size and future subdivision potential. It also had an awesome yield of 6.1%. This one just stacked up. Conversely, let's compare that to the ads we often see online calling for investors to buy new duplexes in emerging areas with an abundance of new development and room for lots more to pop up. While the initial cash flow seems attractive from time to time and the promise of instant equity being spruiked is tempting, the long-term growth potential is uncertain due to the high supply of similar properties getting constructed all over the newer development. This impacts your future growth quite significantly, and look at all those smaller block sizes that will certainly affect capital growth of this investment. So you can see clearly these are 2 very different investment options that we strongly believe will perform very differently in the long term. While duplexes can have their advantage, it's crucial to consider all aspects before investing. Plan properly for the purchase in your investment strategy. Make sure you do your research and understand the market. Have you come across ads for duplexes? Have you invested in one? Share your experiences below in the comments. Would love to hear them. Until next time, happy property navigating.